sucking my resources. Maybe it's the Bank of England. We'll see. All right, so I finally got MT4 to start. Sorry about that. So it is now 8:02 in the morning. I don't know what's going on at the Bank of England. I suppose they didn't do anything. So that's cool. That's big news. And of course, today is the wicked, crazy, unbelievably bad weekly jobless claims. Maybe it's not so bad. Usually it's 200,000, maybe it's 2 million, maybe it's 1 million, maybe it's less, maybe it's more. But it's going to be interesting. So we can handle that together. Here we go. The biggest weekly jobless claims report you've ever seen in your entire life. Let's do it. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hi, my name is Wayne. Ni hao ma. How's the beard coming? This is my epidemic beard. I don't know much about the zombie apocalypse, but they do film The Walking Dead right around my house. And I'm like, everyone's got a beard. So I got to get my beard on, right? So anyways, what do you think? It's coming, right? That's not too bad. So what? Lose it? Yeah, maybe. Yeah. There's a little bit of white here. Anyway, so yeah. So that's all I know about how to handle an apocalypse. You got to get your beard on, boys. So anyways, good to see you. Welcome to Forex.Today. Thank you for being a part of this community. Thank you for not freaking out. Thank you for focusing. Thank you for working hard and diligently at trading the way you want to trade. This is a real test. Like I said 2 weeks ago, I said, this is a wake-up call. Training's over, guys. Time to be the trader you've been training to be. Time to do it. Time to get on with your success. So hopefully you find that you're supported through these interesting times. If you are enjoying these videos that I'm doing every single day for you, well, they're brought to you by the good people at tradersway.com. Make sure you visit tradersway.com. And when you're at tradersway.com, fill out the form to open a demo, then download MT4 and play some trades. If you do that, you can check out the execution speed, which is fast. You can check out the spreads, which are narrow and competitive. You can check out the swaps, which are high, right? And then you can get used to trading with them. And maybe in a month, maybe in a year, maybe in 10 years of hanging out with me, because I've been doing these webinars for almost 20 years now. So at some point, hopefully you develop the skills and the confidence you need in your trading ability by attending these webinars, and then you pay it back by opening a live account with Traders Way. Okay, that's the whole idea. It's a symbiotic relationship. We help each other. Please leave comments, please like, please subscribe. All those actions tell YouTube that this is quality content and that you value the Forex.Today community. Okay? Okay? Please do that. Would you please like, subscribe, and comment? Right now, even right this second, less than half of you have clicked like. Joe's done some good trading, likes my pivots. Everyone should like and subscribe. Thank you, Joey. You know, I've been getting actually lots of emails from people, even people that haven't really even attended the live webinars in years, but I'm getting these emails of people like, oh my God, thank you, Wayne. Check out my trading account. Honestly, lots of people have, and I feel really good because it's been a long stretch the last 20 years trying to teach people how to trade, and it's bearing fruit. So I love the fact that this is a time when a lot of people lose money, and yet many of you are doing actually quite well. And that's the whole point. That is the whole point. Cool. So I was firing up the webinar while the Bank of England was releasing its stuff. I don't think the Bank of England was going to do much, maybe even nothing. So what did the BOE do? That came out just as I was launching the webinar. So that was about 8 minutes ago. Your customer, they're at metatraders.com in the advanced toolkit or whatever it's called. Yeah, they held. That's what I thought. Okay, cool. Well, I use Wyatt, but then I have my the ones that I just released not long ago. Anyways, Powell did the morning show. Yeah, he did the morning show, so that's interesting. So whatever, guys. Whatever. Everything seems to be behaving properly. Like this is what we predicted yesterday in the swing trading group. And look, it's followed its way down, and we're already on Friday and Monday's trade plan, right? We're already done. Like, we already planned out the week, basically. But anyways, by the way, those in my swing trading group, a whole bunch of us, dozens and dozens of us met yesterday to do day trading. And I want to let you know that when I ended the webinar, there was no recording. Now, I think I clicked record. I mean, everyone watched me do it. It's been a thing with us, right? I'm like, I gave like 4 people, right? I gave 4 or 5 people the responsibility to remind me. But I did click it, didn't I? I did click. It was recording, right? Yeah. So I clicked out and nothing. So, WTF, I don't know what went wrong there. I apologized. I know a lot of people that are in the swing trading group want to wake up in the morning and catch the recording because they can't be there in the middle of the night if you're European. So I don't know what to tell you except I recorded it, right? I said I was going to do it, right? So when I ended the webinar, there was no recording. Yeah. So I don't know, guys. I don't know. But I apologize. I don't know. Okay. Oh, it's not the first of the month. It's when you join. So it's there every 30 days or whatever is billed. Okay. Yeah, Lugo, I don't know what's going on. So Lugo, when this is done, okay, Lugo, I know you got my email address, Lugo. Email me as soon as I'm done this webinar, and I'll go in and try to find, like, often you're getting me when I'm on my cell phone and stuff. And I saw you sent me the screenshot, so I'm going to try to see, and maybe you got 2 accounts and you're logging into the wrong one is the only thing I can think of. But, okay, so email me as soon as this is done. Okay, anyways. So, good. Let's move on. Let's keep moving. So we got jobless claims. So we got to focus on the buck because we can look at this. Okay. By the way, right before I get all this going, how many people are stuck at home because of quarantine? That you're at home significantly more than normal? Is anybody really locked in there? Yeah, kind of. I had another thought in my meditation this morning. You have the time to watch all the training videos, right? fxbootcamp.com. So the price of fxbootcamp.com is $1,618. what if I drop the price by like 80%? Just for the next few weeks, I drop it by like 80%, something like that. I'll create like a crazy, ridiculous price cut because you're at home and you need something to do. And I would like it that you watch every video and every course 5 times until you're so educated as a trader you want to vomit. You've watched them so many times, you either love me or you hate me. You're like, oh my God. Okay? Right? This is just, again, another way to support you during this crazy time of need. If you got the time, I should. So that's what I was thinking about. Okay. And for those that subscribed and watched the video, paid for the courses, I don't know, 4 years ago, maybe it's an incentive to re-up, do it again. There's a few new things in there too, by the way. There's 2 or 3 new courses in there. So maybe you re-up and you watch them again, and then you watch the new ones, but at a ridiculous reduction, maybe it helps. So I don't know if that's something you would actually do. I would do it. Okay. So it'd be every video on every course ever done for like huge off. Okay. Yeah, and I would run it until basically they all clear, and then I'd jack the price back up. So I'm just doing it to take care of our current community, and the future community will just have to go back paying the normal price. Okay. So anyways, that was my thought process. Let me know if that's what you want. Otherwise, if no one does it, it's a waste of my time. So anyways. All right, so let's go back in here. Huh. Look at that, huh? Sell zone. 1.300000. What do you think about that? No, actually, it doesn't have to be. I don't use PayPal anymore for that. PayPal gets funky in weird ways when people are from all around the world. So I use a different processor now. So as long as you got a credit card, it's all good. Okay. You wouldn't believe how many people like go to pay with PayPal in a payment process, and it gets to the window where it says log into your PayPal account or click this button to pay with your credit card. You wouldn't believe how many people are like, I don't have a PayPal account, so I can't pay for this. I'm like, dude, just click that button. But anyways, so yeah, it'll just be a credit card. Anyways, but anyways, check that out, huh? Sell zone 130. Shoulda, coulda, woulda, shoulda, coulda, shoulda, woulda, coulda, shoulda, woulda, shoulda, wanna. So, anyways, something there. Pretty cool, huh? That's interesting. All right, so let's take a look at BOE, and we only got 15 minutes, less than 15 minutes to the big news. So let's do that. Okay. Check this out. So this is all sell zones, by the way. If you were a bull, let's go bullish here. Okay, check it out. Check it out, y'all. Okay, it's been down, 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 down. Bottom, bottom, buy, buy, buy. And it looks like it's stepping up currently. Okay. Neat, right? So is this pound or is this dollar? Well, you can't tell. You can guess, but you can't tell by just looking at one. So you look at something else and see what the European currencies are doing. Okay. There's a 5-minute chart. Let's flip this over. And let's say, well, if it was congruent, then this would be bullish as well. Okay. And check this out. You would have wanted this as a bull. Didn't even get it. What you did get was a roll reversal. Okay. It traded more like a breakout than a typical day trade. Okay. But this might be one of those examples of why you let it run. Okay. Versus buy, exit, you know, like a typical day trade. It was actually something we talked about yesterday in the swing trading group. I accidentally made like 230 pips in a day on a trade that should have only yielded about 150. So we talked about this issue, like if it was a true day trade, I would have exited at the target with 150, but I accidentally made an extra 100 pips. So what do you do? And so we talked about that. I'm like, well, there's many different ways to have managed it differently. There's many different ways to analyze what you should do. We covered things like splitting the difference in the law of averages and how to tiptoe, you know, from a scalp into a day trade, into a swing trade, and all that kind of stuff. And on that one, I just basically left it. I think what I did was I locked in 100 pips profit. And we talked about how really that wasn't the right thing to do, and then why. But at the end of the day, if you only get 100 pips on a trade, I mean, boo-hoo, right? Well, you know, so that was kind of the question, right, Baby G? Because when I took the trade, I was actually showing people how to enter. So somebody asked, you said, look, I'm doing all right with the strategy part, but with the tactics of actually pulling the trigger, I'm missing trades, is what the person said, right? So what I did on the trade is I said, well, okay, well, we'll use this as an example. Let's say we're up here. And I said, well, what you want to do is you want to find your area that you want to buy. So there's your future buy zone, and you need this to fall. And this trader was missing trades. So I said, well, what you do is you'd create a plan A and a plan B and all this kind of stuff. And you'd use a limit order, and then you'd use your OCO. But I didn't use the OCO, but you would use an OCO to set all of that. And I ended up just talking about, you know, where the proper stop placement would be and all this kind of stuff. And then I went on with the webinar, and we came back, and it came down and hit my plan A. So I was in. So I'm like, well, I guess we got to put a stop on that. So we put the stop, and that's what it was. But I didn't do the normal process of an OCO because I was in the middle of teaching how to enter a trade. And sure enough, I entered the trade at exactly the right price and at exactly the right time. And then so at the end of the webinar, I dropped the stop, and we came back 24 hours later for the next day trade. And not only did it make 99 pips, so it wasn't even the 99 pips though, Baby G. It had to do with where the target was. And the target, because the average daily range is so much higher than normal, the target wasn't 99 pips away. It was like 150 or 180 pips. So when we logged in 24 hours later to check out my day trade, well, son of a gun, I had made like as much as 250, and I think I still had 225 pips profit on that. I'm like, oops, I made too much on the example trade. So then we talked about, well, how do you manage it and all this kind of stuff, and do I let it run, do I not let it run, and all that kind of stuff. And so that was a big part of what we're talking about. And if you're thinking about, so like there's the target, Baby G, here's the entry, here's the target, Baby G, like you're not quite hitting the target. But if you were, do you get out? Well, that's a management decision, right? That's your alpha. There isn't a right answer. There isn't a wrong answer. It's your decision that matters. Sometimes letting it run gets you in a situation where this was your buy zone, this was your target, and this was your next buy zone the next day, and you didn't even get it because it was running so hard and so fast in your favor that basically, look at this. In one day, I got 2 days worth of trading. And that's the secret of creating wealth versus working for a living, letting your winners run your money's working for you. You don't work for a living, your money works for your living. Okay, so anyways, that's the whole thought process on that. Okay, so we got to go. We got to move to the next. We got to move. By the way, the Asian currencies were down and the others were up. And here's that recovery. So this was the big thing we were talking about yesterday. And then I need to move and get ready for this announcement. But dropping into a 5-minute chart, here's what our problem was yesterday in the swing trading group. On the Asian currencies, we were preparing for this, except we were down here in Asia. Okay? Too low to sell, too low to buy. And so it was just a giant caution. I said, guys, you got to be careful. You got to be careful. We got to be careful. We got to be careful. The Asian ones are oversold. That doesn't fit the trade plan. Maybe you should take a walk on these. And we looked at the European currencies, and they did offer the up that we were looking for. Okay? So we were thinking, you know, up on the yens, up on these dollar pairs, basically risk on. And yet Aussie and Kiwi were way down. So if you were a bull, you ignored it. If you're a bear, you probably found... Well, if you're a bear, I think it looked like this. I think the sell zones were not proper either. I think you had higher, right? Right? Like I think our issue here was there was, 2 days ago sell zone. And then yesterday or today's sell zone, which we were planning yesterday. The sell zone's up here and you're a bear. And plus this is stepping up. So I said, even if you're a bear, you should probably walk on this. Take a walk. Know when to hold them, know when to fold them. I said this might have dropped for 12 hours straight, but you still need it to go way up here and challenge 6.0 before you get an opportunity to drop it. So really now is the first opportunity, I think, for bears in a long time to sell this, if you happen to be a bear. So now a bear would be preparing for a lower high, lower low scenario, right? So you should know this. If you're a bear, this is what you should be doing. In fact, you should have planned it out 12 hours ago that you were going to sell it around 106. Sorry, not 106, 0.6. And that's my whole point, by the way. That's my whole point. If you're logging in going, I wonder what I should do today. I wonder if I should sell this. I wonder what's going on. I don't know what's going on. What the heck's going on? That's your problem. You need to change that. So this is the stuff we were talking about yesterday, almost 12 hours ago, right? We were talking about that here. Like if you're going to be a bear, this is your bearish sell zone. So it's very, very, very likely you're in it already or you're about to get in it. You have it all planned out. You got your prices. You got your lines. You're already watching it roll over. You're already game on. And someone else walks into the room and goes, what? What's going on, guys? Hey, what's up? Hey, so, and it's the fact that there's no plan. It's not like an ability to read the market. That's not the problem. It's not your ability to spot a 5A cross. That ain't the problem. You do so many things right, but most likely the biggest mistake, if you have the education, if you know technical analysis, right? If you know that, then the biggest mistake is you just have no plan. You didn't plan today, yesterday. That's the biggest thing that's probably holding you back. Okay? So imagine... Thank you with the reminder on the news. That's probably the biggest thing. Like that's why we meet Thursdays at 8 p.m. Do you know what we do at 8 p.m.? Plan the morning. Right? Yeah, we're waiting. Okay, we got a couple more minutes yet, guys. I think if my microwave is correctly, I always look this way. I have to look to the kitchen. My house has 2.5 kitchens. It's weird, huh? Why do you need 2.5 kitchens? I don't know.
Collector's Mint protects your purchase price with our silver dollar money back guarantee. But you must act soon to own this authentic Morgan silver dollar at this price. Orders accepted on a first-come, first-served basis. Don't
This is Bloomberg, by the way.
now.
To order, call 1-800-459-1417. That's 1-800-459-1417. Strict limit of 5 coins per caller. So call 1-800-459-1417 or log on to realmorgans.com.
True diversification. That's what adding commodities exposure to your stock and bond portfolio can help provide. The Bloomberg Commodity Index is the standard for commodity market exposure. 23 traded commodities are represented: agriculture, livestock, metals, and energy. The Bloomberg Commodity Index is the benchmark most widely used by investment professionals globally. Track your commodity investments with a proven financial
Bloomberg is a billionaire. Of course he is.
Bloomberg Commodity Index. True diversification.
Climate change is the defining issue of our time. So we've redefined how we cover it.
Hey, pure mathematics. You trade a $5 trillion a day market, you'll be a billionaire someday. He made his money just being a broker.
We look at stories from every angle to provoke debate, spotlight solutions, and make sense of the greatest crisis of our generation. Bloomberg Green, solutions for a changing climate.
You just get a whole bunch more stuff, your customer.
This is Bloomberg Daybreak. I'm Alex Steele. Jobless claims coming out in just a few seconds. We're seeing a risk-off tone really develop here now in the market. The S&P taking another leg lower over the last 20 minutes, now down by over 2%. You're seeing a little bit of bid now coming into the dollar, bouncing off the lows of the session, and the bid continues into the long end of the bond market here in the U.S., as well as everywhere that you can see over in Europe, particularly in Italy and Greece, the hardest hit peripheral nations there. So initial jobless claims dropping in just about a second here. How bad will it be is the real question.
How bad will it be, everybody?
At 3.2 million is what I can read here. 3.2 million. Well above estimates, near one of the higher ends of economist estimates. Morgan Stanley had the biggest with a
3.2
estimate.
OMG.
Continuing claims soaring. I mean, really jumping from the week before.
Oh my God.
3.2
Becky.
million. And just for the other reads, final read on fourth quarter GDP, 2.1%, coming in bang in line with estimates. But retail inventories for February coming in a little light, now down by negative 0.3%.
Oh my God.
Claims number 3.2 million. Hey, Mike McKee, Bloomberg National Economics and Economics Policy Correspondent, still with me, as long as Barry Knapp and Simona Makuta of State Street. Okay, Mike, it's bad. It is as bad as everyone was thinking?
Yeah, there's no question about that. The forecasts were as high as 4 million. This comes pretty close. Rounded off to 3.3 million. Now, the frustrating thing here is we are, because of the lockdown in Washington, D.C., we're not having the lockups that we usually have, so we're not getting the data as quickly as we usually do. And what I would like to see here is the raw totals, because these are seasonally adjusted. So it's probably a lot more than 3.3
Yeah,
million.
I talked about 4 million. I think it was on Monday,
Jobless
right?
Saying that every million increase in jobless claims equals a percentage point in the jobless number, the overall jobless number.
3.3,
So
Johnny.
You can see the March payrolls report in April go way high. Let me see here if I've got the raw numbers here. I don't. These are all seasonally adjusted numbers at this point in terms of the data that's come out. But boy, that's a huge number.
Thank you for that amazing report. That number's big.
Surging 3.2 million. Hey, Simona, can you weigh in here on this? Because how bad is it going to get in the jobs market?
So near term is going to get bad, but
Look at this. Nice, thank you. Such good economic reporting. Yeah, awesome. All right, thank you, Bloomberg. It's bad. It might get worse. I don't know what's going on. All right, cool. So anyways, look, at our lines are still being respected. There isn't a freak out. Make sure you're doing your job. Identify all your levels, right? You can see there's definitely something going on here to here. So that's cool. So we'll mark all that up. Okay. You can see it did a 618. Okay. Cool. Right on. Okay. So do you want to be a bear into here? if that's your choice, I mean, I don't think it's new information. No one thought it would be a good number, right? So, like, there's nothing new here. But the other way you can play this is this way. But you know what? You got to go all the way out to tomorrow's sell zone. And this is still a step up, guys. So as crazy as you might want to respond, or as much as you might want to respond to this news, the interesting thing is even when I have this set up bearishly on a 15-minute chart, this is still not a good opportunity to sell. Now, you might be trading the volatility, which is just the pure news, but it's not a conservative, repeatable trade. It's just volatility. So if I were a bear here and I wanted to sell, okay, I understand the news. I mean, I get it. But if I were to trade this properly, what I would look at is I'd want the lower low, lower high, lower low. I'd rather sell this tomorrow, if that's the case. All right? And by the way, while we've got the news and stuff going on, would you please take a moment to click the like button? And if you're new, would you please take a moment to subscribe? I've been doing these videos, these live webinars for 15 years or something like that. So it'd be cool if you want to hang with me tomorrow and next week and the week after and the month after. I've been trading Forex longer than your last guru's been alive. So make sure you click like. Right now, 66% of you have not clicked like. Come on, dude. Click the like button. Kick down, come clean. Don't be a holdout machine. So anyways, you have the choice right now. Do you just trade the volatility off the news? Or do you want to set up a proper trade that will last more than 20 minutes? Okay? And so this is my sell zone for tomorrow. I already got tomorrow planned out. Okay, that's my whole point. That's what saves me from mistakes. So if this drops all the way down here today on the vol trade, the scalping trade, that's cool. That's fine. There's still support here. Okay. So the next move, if I'm going to be conservative and disciplined and have a repeatable trade plan, it would look like this tomorrow. This would be Friday. And in fact, I'd probably get this at Asia Open. So I could fold this in and I can scalp my way down, let's say the rest of the New York morning, maybe even the New York afternoon. So after London close, have it fade up in Asia, and then I'll drop it like it's hot during Shanghai. Front run the London boys. That's how I would do it if I were me. What do you stink? Smell like a plan? Okay. So that's how I'd look at this on a 1 minute chart. You're like, that's cool. Maybe you pick up some pips, ride the volatility, but there's a bigger trade. If you're right on this, beyond the volatility, there's a bigger trade. Okay. There's a bigger trade. Okay, so anyways, I'm going to leave this fib on here for you guys. You should also recognize that you're supposed to sell high, even in volatility, yo. Even with volatility, you're supposed to sell high. So you can't sell around this 109.25. The earliest you could possibly sell this, it would be off the 109.50. Okay, that's a midpoint psych level. It's a 382. Maybe you sell it off these moving averages, you know, on 121.4, but really you're supposed to be short here, that if you're going to even scalp properly. So you have to make a decision on what you want to do. And this is not a good place to just now respond, because as I showed you earlier, this is clearly supportive. So if you sold now and you made money, let's say you sold it and you did make money, you have to say, well, I feel comfortable selling at support. Nah, I don't feel comfortable selling at support. And if there were bulls that say, okay, we expected a big number and it could have been a lot worse, bulls would be doing this now. Okay? Remember, that's not actually a bullish trade. I'll show you something over here. I'll show you. What it actually is it's a range trade. Okay? So here's how you trade the range. A bull would buy it simply because it's bullish, and a bear up here would sell it simply because it's bearish. Okay? And there's really no direction. All you have is the volatility of the news. But look, the news was bad. I get it. But we already knew the news was going to be bad. Who thought it was going to be less than 1 million? Nobody. Everyone knew it'd be 1 million. or 2 million or 3 million, maybe even 4 million, like we already knew. So where's the alpha? There's no alpha. There's only volatility, right? So if you are selling at support as a bear because you're chasing price on news, on the volatility, you're probably going to be punished. And if you do make money, you got lucky, and unfortunately, you're going to screw up 5 more trades before you realize you got lucky. Okay? So really what's going on here is you're stuck on inside range, and eventually I think what will happen is we'll return to a trend. And if you back out, right, this isn't good trading conditions. Like, look at this. This is a 4-hour. What do you call this chart? What's the name of that pattern? There's no pattern like that, right? So, like, where's the easy conservative trades? And you know what? We don't have it here. So I would caution you. If you want to sell a little bit higher and then be in it a little bit longer, okay? And such. So let's go around the world. Let's check out gold. Let's check out Bitcoin. Let's check out everybody else. Let's do around the world. You guys still with me? And by the way, I heard a bunch of people subscribing. Thank you very much. I think we'll be crossing 12,000 subscribers today. So thank you very much for being part of the Forex.Today community. I look forward to working with you every day. Okay. All right, so let's go around the world. La-di-da-di-da. What are we doing here? Let's do Bitcoin. Bitcoin. So this is what we put here 3 days ago, and we're still waiting for it. Okay? So we don't got it yet, but here's the plan for those that are just checking in. If, listen to my language, if you're already a bear on Bitcoin, this is not a call that Bitcoin should drop 3,000. If you're a bear, your trade plan, the trade plan, if you're a bear, that's all it is we want to sell off of this, and the target is $3,000 lower. Oh. Okay. Are you short at 69.75? That's the idea. You're basically selling it at 7, going for 4. It's actually lower than that. It's actually almost 3. So really, I could say it's a $4,000 drop. Okay? If you are a bear and this holds, then it will roll over. And if it rolls over, technical analysis tells me that. It's not my opinion. You got to remember that. It's not my opinion. It's just what the charts tell me. Okay? So if you happen to be a bear anyways, you're going to be thinking about dropping it there. That's what a bear would do. If you were a bear, that's what you'd be doing. And that's what technical analysis tells you. It's a self-fulfilling prophecy. So again, if you're a bear, it's just what a bear would do. So let me do it this way. If you're a bear, you sold it there. It went back up to 10,000, which you sold it, dropped back here. So what do you do next? That's what a bear would do. That's what technical analysis tells me. All right? So interesting, right? So that's the price. Sell it off 7,000. Now, this was a plan I think we did on Monday. So here we are on Thursday. It still hasn't dropped, but it still hasn't gone up as well. Which is interesting. But don't throw down a trade and say, well, Wayne told me to. I didn't tell you nothing. That's what the charts say. If you were a bear, you'd be looking to sell. Now, there's some levels of caution in here because of the consolidation. But, okay, we're stuck between the 5 and the 21. One of these is going to win, by the way. 21 is going to push it down, or the 5 is going to push it up. Who's going to win? I don't know if that's called your bias. If you're a bear, you're like, that 21 is going to hold and squeeze this to the downside. Great. If you're a bull, you're like, that's nonsense. This print down here at 3,700 was a blip, and we're coming back, right? Zombie apocalypse is going to push Bitcoin up to 40,000. Well, whatever. You still have to trade it. Well, how do you get it on Trader's Way? You go here, and then you right-click and do Show All, and at the bottom you'll have all these cryptos. So you got all these. You got tons of fake money to trade. There you go. Okay. Cool. So anyways, still waiting for that. Let me check the beast here. Okay. This is a beast on a 1 minute chart. Big giant sideways. So this one's interesting because in the swing trading group yesterday, our trade plan. So let's go back 10 hours or whatever it was. We were here in the swing trading group and we had an up here, but we were also cautioned with this idea that, it's printing a lower low, it's printing a higher high, and now we're stuck in the middle. We don't really know what's going on, okay? So we need something to break one way or the other. If it breaks down, then we'll just flip our charts to a bearish point of view. At that point, we were still hoping for a risk on, right? Because of the step ups, okay? I don't like to sell when we're stepping up. If it drops back down here, then Monday, I'll probably be selling here. Or Friday. Friday, I'd probably sell it off 132 and bring it down, okay? But technically, it's still slightly more bullish than bearish, okay? And that's why we did that. You do not think USD is fake money? It's real money. It's the basis of global trade, Peter. Now you might say, well, it's a fiat currency and it's manipulated by the Fed and blah, 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 blah. Sure, totally agree with that. But if you're Malaysia selling oil to Japan, you do the whole deal in dollars. So it's real if you believe in the oil. If you think oil's real, if you think gold is real, if you think business transactions are real, and global banking and supply chain management and financing, all of that is real, and it's all done in dollars. So, yup, it's real. Okay? Okay? Cool. Coolio, coolio, coolio. Coolio, coolio, coolio. All right. Let's go to gold. All right. So tons of lines. If you're new, don't get all freaked out. The bigger lines are monthly pivots, so let's get rid of that. Let me just do weeklies here. Okay. Let's do it this way. Well, I'll just do this one. Okay. These are weekly pivots. So what do we know about pivots? Well, pivot points, let's go back a period here. This says sell, and this says buy. Oh, no, actually, no, that's too low. Sorry, let me redo this one. This one says sell, okay? This one says buy. Cool. By the way, this not only says sell, it says there's your extreme target. It went a little lower, unusual, but you got lucky. This one says buy, and this says this is the extreme target. So if you were going to be a bear next week, you're going to sell probably in the next 24 hours. So you would drop into a small time frame like a 5-minute chart, and you'd look for reversal patterns and oscillator rollovers and whatever you like to confirm your bearishness, okay? Now, if you're a bull, there's something different. You're going to let this fade back, and between now and Monday, you'd be a buy of the dip, and you would be a buy here. Now, what do you notice? The thing you should notice is both bulls and bears want this to come down. Bears want it to come down so they can sell a lower high and get a lower low. Bulls want to have it come down so they can buy it low. Think about what traders want to do. Bulls want to buy low, so they can't buy it now. They bought it down here and they made money. Bulls already bought it, so now they'll probably take some profit because they see they're at key resistance, right? So they take profit. What happens if all the bulls start to take profit? Well, it drifts back down for a day or two, and then what? Now it's low. Now they got the roll reversal too, if you know how to do price action. Now they got this going on for them. They got the roll reversal. They got the pivot, they got the pullback, they got the fib retracement, they got the 3-wave correction if you're an Elliott wave dude. And long story short, between today and let's say Monday, bulls would take it long. So you just have to know if you're a bull, okay? Now, if you're a bear, of course, this is the interesting part. You also want it to come down. So what do you need for this first part of your effort? You need the bulls to get out. So that's where the profit taking comes in. So, oh my goodness, that's perfect for a bear because the bulls are taking profit because this is the predicted entry. This is the predicted exit. So probably many of them will exit. So now, between now and let's say Monday, it comes down. Even the bulls believe it'll come down. But what will happen is you'll get a lower high and lower low if there's not enough bulls to take it over. So between now, like a bear might sell it now, or not now, let's say in the next 24 hours, bring it down and then get a reload and hit this target. And we just basically get stuck in this range here. Okay? So how do you decide which one's which? Well, that's your fundamental bias. Okay? These charts don't tell you what to do if you don't have a bias. You're the one that makes the decision if you're a bull or a bear. Okay? So again, this isn't a clear range because where we were. So like let me add some time here. Okay? Let's do some math. From January to today, it's just slightly bullish. Okay? So do the math. Y equals mx plus b. Okay? Y is equal to m. M is your slope, which is equal to rise over run. Rise over run. Okay? Okay? And b is your intercept. And you do the math, and it says, based on the scatter plot of prices on gold since January 1st to now, you got your mean, you got your deviation, so you got a plus deviation, minus deviation. This creates a standard deviation from the mean. And if you look at the slope, based on the rise over run, and the mean, and the intercept of the mean, it's just barely bullish. So, what does this mean, Basil? Talk to me, Goose. It means you probably shouldn't be trading it in the middle because it's just as likely to go up as it goes down. It's easier to say that, right? But I like to take the opportunity to explain what's going on. But can you now see that it's neutral? Don't fiddle in the middle. That's pretty funny. Pretty funny. Don't fiddle in the middle. Okay? Don't fiddle in the middle. So like if you're, right? Cool. Goose says I'm right. Of course I'm right. Thanks, Goose. You guys remember the Cap M we did yesterday? Was it yesterday we did Cap M? Does anyone remember? I was wondering if that helped you understand sort of like what we were doing when we were talking about the stock market and people's thinking, right? I still think it's funny. So what is it? The expected return of a stock is equal to the risk-free rate of return plus the market beta times, right, the expected return for the market, right? Is that right? Expected return for the market. I'm pretty sure that's right. Minus the risk-free rate of return. Okay, and this is what people, at Harvard Business School getting their MBA is taught how to price a stock. I'm like, dude, you don't buy Carnival Cruises at $8 a share or Delta Airlines at $20 a share because of that formula, right? The expected, right? The expected return for a stock, let's say the expected return for Delta Airlines is the risk-free rate of return. What's the risk-free? The 10-year T-note. 0.8. And what's the beta times the expected return of the market, which is what? Negative minus the... I mean, like, this doesn't make any sense. So, why do you buy Delta Airlines at $20? Why did you buy Carnival at $8? Because you think it'll be around in 20 years and it's dirt cheap. By the way, Delta has gone from 20 to 30. It's up 50% now. Yep. Should have bought it. We talked about it. All right. So let's go to our euro dollar. That one's working well. This is set as a bear, but it's not really. That's not a bearish trade plan. So let me go to my indicators. And you go to biased pivots. And you put it from bearish mode to bullish mode. That's really what is set up here. Okay, and you'll see what the trade plan was. Okay, double bottom, higher high, higher low, 50% retracement on the roll reversal, long and strong. Now here's the interesting thing. If you bought here, it predicts here. That's the predicted top. Okay. These are 1 hour candles. Okay. So that's the basic of a weekly swing trade. Okay. Now, that's based on Fibonacci, that top. Okay. Oh, we'll go over there, Raj. Hang on. Okay. So that's based on Fibonacci. If you're using the pivots, though, let me get you the actual target. The actual target based on the pivot strategy is right there. See, bullish profit zone aggressive, 114.50. Yeah, you were buying it at 107. Check that out, guys. 700 pips on that trade. Yeah, Lira's on the monthly pivot, Bill. Are you taking it? I don't know. You have to be risk on to do that, Bill. So anyways, that's cool. Somebody asked about USD Kitty Cat, USD CAD. Let's take a look at USD CAD. Let me blow this up. Boom. All right. So I have, let me show you my entry. So I shorted this one here. So I'm short here. This is 2 days ago in the swing trading group. Sorry, in the day trading group. My day trading example was lower low, lower high, sell off the pivot, which I did. You can see I'm short here. Then I said at the beginning of today's webinar, I accidentally made too much money. So yesterday, last night in the swing trading, in the day trading group, sorry, we talked about it, 9 different ways to analyze this and multiple reasons why maybe I should hold it, maybe I should fold it, but I explained exactly what I wanted to do and why. And so I said, I'm going to lock in 100 pips just in case something radical happens, but I'm going to let this run, and I explained why. And so now we're down here. So I'm short at 144.5. And we're at 141.5. So I'm up 300 pips profit since Tuesday? Tuesday. In a day and a half, basically. And this is me live teaching people how to day trade. Isn't that neat? So we took it here. Look how beautiful that entry was. And yeah, so I'm up 330 pips. Yeah, boy. Yeah. So I'll lock in a little more. And there, so now I got 150 pips locked in. Worst case scenario. Now, the funny thing is I said, if I get this right, I'm going for 900 pips. On a scalp. I'm going for 900 pips on a 5-minute scalp. I took it on a 5-minute chart, guys. Front running the Shanghai Open, front running the London boys. So if you're going to join our group, guys, it's swing.fxbootcamp.com. Okay, cool. So let's move on.com. Let's go back to the standard operating procedure here. Okay. La 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 la. Again, only half of you have clicked like. Would you please take a second of your time and click the thumbs up button, please? Costs you nothing. It's very little effort. Would you please click the like button? Just tell YouTube that this is quality content. You don't have to fall in love with me. Even if you hate me, it's probably reasonably important information that you're getting. So would you please just have a courtesy and tell YouTube this is good stuff. Keep it going, YouTube. Okay. Cool. Thank you, party. What do I want to do? I don't want to get into Lira today, although Lira's at a good spot. I can see it. It's a monthly if you're doing it, but I don't want to coach people in it. Right? That's up to you. But you're at a logical resistance, but you need to be full bore risk on, and that's going to be your alpha. Okay. Yeah, well, thank you, Javier. I know you guys are working on it. I get it. What do I want to do now? What do you guys want to do now? Let's do that. Why don't I take it open? Why don't you? I'll do requests. What do you guys want to do? And I know Bill just said, "Hey, could you cover Euro Lira?" And I just said no, but only that's just too dangerous for most people. Okay. Okay. WTI, sure. WTI, stabilizing. We've been going up and down between 22 and 25, 22 and 25, 22, 25. Right now we're holding up above, basically at 24 and some change, 23 and a half. So it's stabilizing. If USD CAD is rolling over to the downside and I'm now profitable by 300 pips, then this should, you would think, be going up. We just had by far the worst weekly jobless claims in the history of the United States of America, and oil did not go down. So this shows you the basis of our conversation with WTI going over the last 2 or 3 weeks. This is not a supply and demand issue. So typically when you're looking at oil, you do something like you do something like this. So you say the oil, right? And you do the price of oil and you do the quantity of oil. So 1 million, 2 million, 3 million, 4 million, 5 million, 6 million, whatever, a billion barrels, and we'll make some sort of price here. The higher you go up, the bigger the price, okay? So typically this is what you would do. The value of oil and the quantity of oil have a relationship, okay? So you start with demand. Now, demand is downward sloping, okay? Because as the price of oil falls, the more you're going to buy it, okay? If oil is $500 a barrel, you're only going to buy a very little amount. You see this? But if oil drops from, let's say this is $50 a barrel. At $50 a barrel, one might be demanded. At $30 a barrel, this might be demanded, right? So as price falls, the quantity demanded will go up, okay? Now, that's standard. So therefore, supply, and I'll do that in a different color. Here, let's do supply in a sort of a different blue. Supply is upward sloping, which means as prices go up, if you produce oil, you're happier to sell it at $50 a barrel than $30 a barrel. And somewhere you get an equilibrium price. So in this case, the equilibrium price is stuck around three whatever quantity of oil and 3 whatever price. Okay? So that's a typical how you do this. Now, if something changes and you have an exogenous supply shock, okay, and less oil is produced instead of 3 million barrels or 30 million or whatever it is, okay, only this much is produced, and you get to a supply 2 issue where supply of oil has reduced from 3 quantity to 2 quantity. So less oil is produced. What happens to price? Oops, well, this didn't line up. Sorry. This was supposed to line up. What happened to price? It went from 3 to 4, almost 5, right? So price went up when supply went down. So supply went up and price went down, but also demand went down. We're in this situation where demand for crude went down, and that lowered price. But also, so demand went down, but also a price war between OPEC and Russia, and really the Americans and the Canadians and everybody else. This price war broke out, and Saudi Arabia actually increased production and increased it to a maximum production, opened up every pipe they had, and then on top of that went into storage and added more oil to a market that was demanding less. And they did it on purpose to create a price war, to put out other producers, put them out of business, right? Bankrupt other producers. So that normal model of looking at the supply and demand equilibrium in the marketplace doesn't fit this model. Okay? Doesn't fit this model. It's not normal. This is a price war. So you kind of got to look at it that way. And right now we're printing multiple floors here, and I'm paying attention to these floors. Okay? So we got one at 22, basically one at 23. So why don't I just do it that way? Okay. And another one at 24. Okay. And if we can get through 25, we're going to go up to the next level. Okay. Any recommendation where I can find info on Boeing? How about Boeing.com? Oh, I hope you're okay with that, Carl. Yeah. I have a macroeconomics degree from Harvard, so it's in the way that I think. I'm also a finance guy, right? So I was a venture capitalist. So being in the venture capital world for many years, it's just how I think. I think like a business person. I don't know anything about Boeing stock. This is Forex.Today. I know how to trade the stock market in general, but I don't pick stocks. I let my wealth management team pick stocks for me. I'm not a stock picker. I'm a macroeconomic trend trader. Okay. Yeah, oh, you're a finance guy, so you understood at CapM, right? So, like, for example, Carl, like, do you believe that the value of a stock has to do with the future value of discounted cash dividend payments, right? Like that's what they teach. The stock is worth the discounted future value of dividends. You're like, what? But they teach that. I'm like, that. It's not even in a perfect world, Jim. There was a time, and this is where education gets to be a problem, I think. In 1950, you bought a stock like Coca-Cola, okay, and you treated it like a bond. Right? That's how you looked at it. You bought a stock and you held it for your entire life. And it paid you dividends. So think of it this way. It's like putting money into a bond. You purchase it at a face value or at a market value, really. But let's say it's a new issue. You give Coca-Cola $1,000 and every quarter or twice a year, whatever it is, you get a little dividend payment. That's what a bond is, right? Or in that case, a coupon payment. And now you can price the value of the bond based on all the future value of all discounted cash flows, right? Or you can, it's a stock, you could do it that way, or you could use CAPM to say, well, my expected return, when you look at the beta of the market and all this kind of stuff, plus the risk-free rate of return and all the dividends and all this kind of stuff. And you look at what they do and you're like, oh my God, you're actually pricing a stock in a similar way you would price a bond. And that's how you would have done it in 1950, and they still they still teach it that way at business schools around the world. And yet you're like, there's no way people buy Apple because of that. There's no way people buy Google because of that. It makes no sense. Right? That's funny. Coca-Cola was your first stock. I bought Apple computers at $6. It was the first thing I ever bought. The first bottle of wine I ever bought to collect is now considered the first cult cab of Napa Valley. I still have it in my wine cellar. I think it's a 1991 Beringer Estate Reserve Cabernet Sauvignon. It was never even sold in a store. And about 2 years after I bought it, it was on the cover of Wine Spectator magazine. And apparently now it's considered a cult cab and pretty interesting. So as far as my first stock and my first wine and that kind of stuff, I did all right. Did pretty good. All right. All right. So what do we want to cover? Any requests? Let's do another request. Aussie Kiwi. Okay, Raj. That's a weird one for me. I don't even know if I have it. I don't even have it. That currency pair is not something I cover. So let me talk about it anyways. So I have to find it now. So let's get out of this one. So I got to go here and Aussie Kiwi. Now, a couple of things. The only people on this planet that would care about that, and by the way, I don't mean to be hurtful, here it is someone that's either Australian or from New Zealand. Okay, so there's your, let's put this up here. This is based on relative strength. The macros are going to be basically the same. Macroeconomically, Aussie and Kiwi are both Asia Pacific currencies. Both are exporters. Okay? And from a macroeconomic point of view, I think they're kind of the same. I know they're not the same, but I look at them from macro view is kind of the same. So I don't trade them against each other. Now you say, well, I can see they're moving and there's patterns here, but that's relative strength, not macroeconomics. So this is a different strategy if you're trading this, because what you're trying to say is the economics behind these economies are very, very similar. But one is stronger than the other today or weaker than the other today. And that's tricky when I don't understand the macro reason why. Why today? Why not yesterday? Why not next week? Why next month? Like to me, it's harder to make the decision. They're both influenced by, let's say, the Chinese economy. So if China is buying less from Australia, well, by sort of definition, they're buying less from New Zealand as well. So on and so forth, right? So from a macro view, I would rather say, globally speaking, the market is risk on. If the market is risk on, I want to sell Swiss franc, Japanese yen, and US dollar. Why? Well, they're funding currencies, and the world in a risk-on scenario is using these currencies to finance their business, their trade. This is not just trading, this is business, right? This is business being financed. Think of trade, okay? This is global economics being financed through these currencies and then buying stuff from Australia. So if you're going to buy iron ore and coal from Australia, you're going to finance it through one of these currencies, okay? If you're going to buy dairy products, right? If you're going to buy milk from New Zealand, you're going to finance the trade through one of these currencies. So risk on means you're going to buy more iron ore and coal from Australia. So therefore, you're going to finance it in yen and then convert the yen to Aussie dollars to convert the Aussie dollars into iron ore and coal. Okay. Therefore, Aussie would go up and yen would fall, which means you'd be long Aussie yen on a risk on macro way. When you're saying, well, what about trading this, Wayne? Okay, I see it technically. That makes sense to me technically. What you're doing is a relative strength. That's not how you spell it. Sorry, relative strength. And I have nothing to back that up. It's just you're right. In this moment, Aussie was weaker, and you probably will do well if you do something like this. It's just I can't really explain why. It just is. So you got a valid trade there, except I would switch this chart, by the way. So I'd go to indicator. And if you're going to do this, lower low, lower high, you have to switch your biased pivots to a bearish mode. So I switch it that way. And you should have shorted it about 20 pips ago, 10 pips ago. Okay? And therefore, you're doing this. Okay? Your target is going to be 107.5 or whatever that is. 10007.5. Okay? Does that make sense? But that's relative strength. And you can do that all day. And by the way, that's why I do stuff like this, like scan Aussie. That what I'm looking at here is this. Hang on, let me get this set up. Okay. And maybe you say there's too many lines here. All right, so let's put a very simple template on all of these things so the newbies can see. Scan. Okay. And the reason I have it on scan is actually to do relative strength exercises. So if you were hanging out with me at FX Bootcamp 12 years ago, I would have had the exact same chart, the exact same stuff. All right, cool. So Aussie on the numerator, Aussie on the numerator, Aussie on the denominator, Aussie on the numerator. All right. So let's kill this for a second. Okay. Numerator, numerator, numerator. All right. So 1 hour, 15 minutes. So this has to be on an hour. All right. If we have Aussie dollar strength, then all three of these should be going up. Okay. And it's because Aussie's on the left, Aussie's on the left, Aussie's on the left. So if Aussie's strong, it's going up. This is Aussie versus yen, Aussie versus Swissy, Aussie versus dollar. And what did I just explain to you? If I'm risk on macro, then I'm going to buy this one, and this one. This has nothing to do with whether whether Kiwi is weak. This is only if I believe we have good macro conditions and the market is trading risk on, then I'm trading this, I'm trading this, and I'm trading this. Couple of things. This also tells me the value of the yen, the Swissy, and the dollar. And you can see, eyeballing this looks like Swissy is just slightly weaker than yen. And dollar is much weaker than both the Swissy and the yen. So I can tell you dollar's weak, US dollar's weak relative to the Aussie. Okay, weaker than the yen and weaker than the Swiss franc. All from this, and I can do this in about 2 seconds. Yeah, I guess I gotta go, guys. In 2 hours, I'm meeting with the day trading and the swing trading group. So I guess I've done more than enough today. So thank you for being here. Please take the opportunity to subscribe and to do a thumbs up, likey. And if you could wait a few minutes, and like in 3 minutes from now, this video will be uploaded to YouTube. Would you please leave a comment? Document something that you liked or learned. Say, Wayne, I really like that oil overview. Or Wayne, I really like the relative strength exercise. Or Wayne, I really like that risk management that you talked about. Please document something that you liked, okay? Or something you learned. Or if you don't type good, just say, thanks, okay? And if you want to join my swing trading group with live trading, swing.fxbootcamp.com. And you'll meet with me 2 more times a day, swing.fxbootcamp.com. And we do day trading and swing trading. So today at 11, we're focused on trades that are going to yield 100 to 300 pips, probably a lot more. And by the way, they're not for today. We're setting up tomorrow and Monday's trades today. We're setting up Monday's trades for today, which means if you log in on Monday and go, hey, well, I wonder what's going to happen today, we're already in the trade. We're already in Monday's trade. So if you show up on Monday looking around like what's going on, you've already lost. Because big money, smart money has already done the trade plan and probably already pulled the trigger. That's how it rolls, and I can teach you how. All right. Thank you, guys. You're the best. See ya.